initial public offering of Life Insurance Corporation of India will launch on May 4th despite the reduced offer size. That will be India's biggest IPO with a market cap expected to be worth 6 lakh crores. The IPO will open for anchor investors on May 2nd and for general public for 4th May to 9th of May with a price band of 902 to 949 per rupees per equity share. But now if you are a policy holder, there's a good news that these policy holders will further get a discount of rupees 60 per share, while the retail investors and employees will get a 45 rupees discount. So the big question now is whether you should go for this particular IPO or not. If you're a policy holder, how attractive in a most sense it's going to be for you, and what kind of a fundraising, if any, you will be wanting to take. We'll discuss all of that with our today's guest, who is Mr. Pankaj Manthal. Thank you so much, Pankaj, for joining us today at ET Now. Firstly, onto the mega IPO of LIC. How are you finding the valuations, and what will be your advice to the investors?
See, if you talk about valuation directly, I'll say that it's not a cheap because if you see the earning for the financial year 21 is as per LIC, it is 4.70 per share. And if you see the cap price of this issue at 949, it is around 202 times. So definitely, if you see the average PE of life insurance companies, it is around 80. So as compared to that also, it is very expensive. So I'll say that definitely valuation wise, it is not cheap. But considering that it is the largest life insurance company of India, and considering that they have a large share in this business, it is good to apply in this. But you cannot expect a very good listing gain from the share. But for long term, it can be a good choice.
Thank you, Pankaj, for your take. But the government is coming up is at the largest IPO of all times in the Indian markets. But given the fact that the policy holders are now actually getting a discount, do you find it attractive at this particular price? Given the fact that the price band is from 902 to 949, and additionally they are getting some kind of a discount. Factoring in that, would you suggest the policy holders to go for this?
Yes, see, first thing, 60 rupee discount for policy holder. Definitely it is around more than 6% on the cap price of this issue. So this is good for the policy holders. But again, I will say, if these policy holders have been investing in equity market, then definitely they should apply. But there are many policy holders who will apply first time. So it does not make really a good sense for them if they are not investors for equity just because they're getting some discount or they're a policy holder. That is why if they are thinking to invest in this, will not be a good idea. But if you are equity investor, or suppose you are first time investing in this and going forward, you want to participate in equity market, then also it is a good idea. But sometimes what happens that investors are thinking that first time they will invest in this IPO and they will make good returns on the listing. So I'm not expecting very high listing gain from this share. And second thing, because the lot size is say 15 shares. So if you get one lot of this, then if you even take that 60 rupees discount and plus 20-30 rupees more, at say you earn 100 rupees per share. So how much you're going to earn out of that? That is another question. So that is why I will say that if you want to participate in equity market going forward, or you have been investing in equity market already, then definitely you should apply for this. And as a policy holder, it makes better sense compared to other investors because you are getting 60 rupee discount. So definitely, but otherwise, if like it is an overhyped issue and many investors, they will invest first time in this, they should definitely think that whether it is really a good choice for them or no.
Your point, Pankaj, and we truly respect your readings into this particular IPO. But given the fact that you are in favor of the long-term investing when it comes to LIC IPO, and LIC is a household name, everybody has it, and majority of the members of the family hold an LIC policy. They are expecting returns in the long term, but given the fact that you are also vouching for the IPO in the long-term perspective, would you suggest instead of buying an LIC policy, why not go and expect some returns out of LIC IPO?
Definitely, I agree with you that in long term, you can expect better returns than LIC policy from this issue, from these shares. So from that perspective, definitely investors should think about it. But as I said, see, if you have this mindset that you want to participate in equity market, if you have been investing, then definitely I said one should consider this. But as many policyholders who have never invested in equity market and first time they enter in this. For example, suppose they invest at this price, at listing also they do not expect much gain. After some time the price comes down, or see, when we say long term, it means in 4 year, 5 year or more or longer term, they will make good returns. They will earn better returns than insurance policy that I can expect. But suppose after 1 or 2 years, they feel that the returns are not good, they want to exit, then they book loss. So they have to understand if they are buying these shares, they have to stay for long term. Sometime market will like now also we know that markets are volatile. So in this kind of market also, after say next few months, if you are seeing some price correction in that, so investors should understand this, that if they are participating in this issue, they have to stay for long term.
Okay, so we all are waiting for the LIC IPO, and Pankaj is also vouching and suggesting the viewers to go for it, but in the long term. Thank you so much, Pankaj, for joining us today at ET Now.